Hello traders, Corey Mitchell here with TradeThatSwing.com. In this video we're going to look at how the Russell 2000 index, mainly the ETF IWM, has performed over the long term. We're going to look at over the last year, 3 years, 5 years, 10 years, 20 years. The iShares ETF was introduced in the year 2000, so we're going to go back to then. That's about 25 years ago when I'm recording this. I updated this on June 12th, 2025. A little bit about the Russell 2000. A lot of people think of it as a small cap index, and that is sort of true. The Russell 3000 is the largest companies in the US, and the Russell 2000 index is the 2,000 smallest stocks of the largest 3,000. So if you think of the big companies, these are the ones that are on the smaller side of still bigger companies. So some, will be fairly small, but they're basically outside of the top 1,000 companies in terms of size. The Russell 2000 index actually goes back to 1984. That's when it was originally introduced, even though the ETF was introduced around, 2000. So here's the summary snapshot of how it has performed. So IWM going back to 2000, so 25 years. Annualized return, 7.59%. That says with dividends. What that means is that those dividends, if you were to reinvest them, and so that they get that extra compounding, that it gets reinvested in, and then the following year, if you're making money on more money, and then the dividends get reinvested again. Over here, you would still get the dividends, but you're not. You just take them as cash or something like that. So this is the return without that compounding or dividends, and so you can see a little bit lower. So over the last 20, 25 years, we're in that 7 to 8% average range per year. 10 years, just under 7. 5 years, about 10%. 3 years, 11%. And 1 year, up about 7.5%. A lot of people think, okay, if I just invest in this and make 7, 8% a year, that's great. We would have this, nice smooth equity curve, and generally it doesn't happen. That is the average, or what we end up with over long periods of time. That's what it works out to. But we do have these big up and down years. 2008 down 34% in 1 year. 1990 down 20%. 2022 down 20%. But then we also have these big up years. 47% in 2003. More recently, 2019 up 25. 2020 we were up 20%. So those are some big down years, big up years, and that's basically how we end up with the average or the annualized returns we discussed above. It's not just a smooth make 8-9% each year. It's some big swings. So I bring that up just to be aware of, if you're going to invest in an index, to be aware of how it moves. We'll look at the long-term chart in just a second. This is returns by year. So this is going back to basically while the ETF has been around. So you can see some bigger up and down years, some small years, some big years. And then if we go back further, this will just be the Russell 1000, the Russell 2000. The ETF wasn't around yet. Same thing. We have these, a little bit down, a little bit up, some bigger down years like 1990 minus 20%. So here's a chart of what it's basically looked like, and this kind of gives you a good idea of how prices move over the long term. I'll move my head here. So this is the ETF, and 30% drop, we rally 43%, then drop 38%, then rally 180%. Have a big drop here during the financial crisis, then a big rally back up, 160%, 30% drop. This is only looking at moves bigger than 30%. Anything else is basically filtered out. And so you can see it's not just a steady upward move with any index, the Nasdaq 100, the S&P 500, any of them. We see this type of, bigger moves up followed by bigger declines. But over the long term, you can see generally an upward trend where the returns are positive. ETFs, the main one is the IWM. If you were looking for a slightly lower fee option, it only does about a fraction of the volume. But if you're a long-term investor, VTWO, the Vanguard one, much lower expense ratio. Not that IWM's super expensive, but they're doing the exact same thing. VTWO tends to outperform slightly over the long term because it has a lower expense ratio. One other thing you can look at is, so this is IWM, which is the candlesticks, and then I've thrown the S&P 500 ETF on there, SPY. And you can see over the last year or so, SPY has slightly outperformed IWM. Over the last 5 years, pretty significantly, the S&P 500 has done better. If we go back quite a long ways, they're actually not too bad. When we go back to just like 2000, they're not too bad. And that's when IWM was introduced. So it looks like IWM slightly outperforming. So over various time frames, one may be better than another. In more recent history, the S&P 500 has done much better. Pretty much no matter what time frame we look at. S&P is always above. But yeah, as you can see, if you go back to inception, then IWM has actually slightly outperformed the S&P 500. So when you're considering investments, the Russell 2000 is an option. I like to invest some in the S&P 500, some in the Nasdaq, and if you were looking to add something else, the Russell 2000 could be that. It has had some periods where it doesn't drop quite as much as some of the other indices, where it rallies a little bit more during certain times. So it is smaller companies than the S&P 500, so they don't always move identically. It is generally correlated, as you can see, with the S&P 500, but it is an option to add in if you're looking to gain exposure to some different companies or potentially some smaller stocks. It does move better at certain times. You could research that and to decide if you want to include it in your portfolio. And if you're just trading it, IWM has lots of volume each day to do short-term trades on it as well. But for longer-term investors, you want to decide where it fits in with your portfolio. As you can see, it returns a little bit lower than the S&P 500, but not over the longer periods of time. IWM's actually done pretty well. So that's basically a breakdown of how the Russell 2000 moves. You can see this article gets updated every couple months. If you go to the investing tab on TradeThatSwing.com, you can see average Russell returns. You can also see full breakdowns like this on the S&P and the Nasdaq, where it looks at the annualized returns over long periods of time, returns by year, very long-term charts in the case of the S&P 500, and yeah, you can see how they move. Happy investing out there.